A warm welcome to you, my dear students. Final part of the bank reconciliation lesson, your lesson unit number 9, preparing the bank reconciliation statement. We are starting to prepare the bank reconciliation statement, right? Children who you got together, if you were with me in the previous session, children, a very important part in the previous session regarding the preparation of bank reconciliation statement was discussed. If you did not watch me in the previous session, I advise you better watch that session, the chapter 8 of unit 9, and then you come and watch this session. You then come and watch this one, because that theory knowledge, without that, it's a little confusing if you get to prepare the reconciliation statement right away. With that, we'll look at how to take a start to prepare the reconciliation statement. First of all, children, we have to trace out the reasons for the difference in final balances. The reasons for the difference in final balances, yeah? What final balances? Final balances of what? Reasons for the difference in final balances. Final balances of what? Final balances of bank account and the final balance of bank statement. Yeah. Final balance of bank account differs to the final balance of bank statement. That's what. That is the problem we have at hand. The final balance of the bank account is not same as the final balance of the bank statement. That is our problem, children. This is the main reason to start all these fuzz, to do all these things. This is the main reason. Okay? Bank account final balance. Bank account means our bank account, the business bank account. Okay? The business bank account final balance is not the same as the bank statement final balance. Right. So having said that, children, I'm going through the text very quickly, and I'm going to ask you a question. Final balance of the bank account of the business and the final balance of the bank statement may differ due to the above reasons. Due to the above reasons? What above reasons? Where? Do we have anything above? I can't see anything. But here it says final balance of the bank account and the final balance of the bank statement yeah, may differ. Yeah, differ. This is the problem. May differ due to the above reasons. Above stated reasons. What are these above stated reasons? Nothing is above. No, nothing above. Where are the reasons? Reasons are not above. But here it says above stated reasons. Children, above stated means the things that we have done in the previous session. The reasons were done very clearly. 5 reasons were discussed in the previous session. That's why when I started this session, that's why I mentioned right at the beginning, you better go and watch the previous session if you haven't watched it, and then you come back to this and continue with me. All right, then I hope that you have watched the previous session. We discussed about 5 reasons that creates a difference in the balances of these two. Creates a difference in the balances of these two. Okay, 5 reasons. And children, now we are going to rectify, or we are going to trace out and correct those. That is what we do by by saying that we are doing a bank reconciliation. That's what we do. The reasons for the difference between these balances can be identified, can be traced out only after comparing the bank account of the business and the bank statement sent by the bank. Only by comparing. Then it is actually a little something that is a little confusing for some children, but we'll do it. Comparing the bank account of the business and the bank statement sent by the bank. The reasons should be traced out by comparing these two. Okay. Accordingly, the reasons for the difference should be identified first by comparing the bank account and the bank statement. Okay, first let's compare. But before that, I'm going to tell you one thing. Children, if this is our bank account, if this is our bank account, and if this is the bank statement, and if this is the bank statement, how are we going to compare? Tell me. This is our business bank account, children. Business bank account. All right, this is the business bank account. This is the bank statement sent by the bank. Can you remember we looked at, we kind of examined a bank statement, a real bank statement, and in that session I really very clearly explained how the bank statement is prepared, how the format is coming in a bank statement. Yeah, if you can remember, that's very good. If you can't remember, watch the video. Okay, I very clearly, very so well and clear explained how the bank statement format is coming. The bank statement which is coming from a bank, I very well explained in that video. So I'm gonna consider this as the bank statement. This is the bank statement. There you go, bank statement. In that video, children, I showed you that the debit and credit sides are coming like this, and the debit side, credit side, and exactly, and immediately after that, after the debit and credit columns, the balance column is in the bank statement. The balance column is printed. Okay, this format is called the running balance format. This is a little different to our format because our format is a T format. Our bank account is prepared in the T format, separating each side, separating the two sides, debit side and credit side. But in the bank statement, their format is different, but debit and credit sides are there. I told you that debit is for, in the bank statement, children, the bank statement, in this one, debit is for withdrawals. I will write withdraw because I don't have enough space here. Withdrawals. And the credit column is for deposits. Sometimes in the bank statement that you get, you will not get debit and credit printed. You will not definitely get debit and credit printed. But you must know debit side is for withdrawals, credit side is for deposits. Okay? Okay? Fine. Unlike in our bank account where debit side is for deposits and credit side is for withdrawals, in the bank statement, children, the sides are the opposite. So the debit side of our bank account should be compared with the credit side of the bank statement. Since all the deposits and cash receivings are debited in our bank account, but in the bank statement deposits are credited, our debit side should be compared with the credit side of the statement. And not only that, our credit side should be compared with the debit side of the bank statement. Got it? These are not rocket science, not so very complicated. If you watch the previous video, there's a video that I explain, where I explain the format of the bank statement. Okay, right. Why do we compare now? Why? What is the reason for comparing, for this cross-checking? What is the reason? What? Of course, we need to find the reasons for the differences. We need to find the reasons for the difference in the final balances of this and the final balance of this. Yeah? All right. Now, children, a quick flashback to the video which we did before this one. How many reasons did we learn? 4. 4, right? No, we learned 5 reasons. 5 reasons we learned. Though for those reasons only now we are checking. For those reasons only now we are comparing the bank account and bank statement. If you don't remember the reasons, these were the reasons. Let's take the reasons one by one. First reason, unpresented checks. Unpresented checks. Second reason, unrealized checks. Unrealized checks. Third reason, direct remittances. Direct remittances, that is another reason. Standing orders, another reason. Finally, bank charges is the final reason. We have to find out these reasons, whether they exist in these 2. Okay, you got it? We'll make a list of the reasons, shall we? We'll make a list of the reasons. A quick list of the reasons. Reasons, one by one. Number 1, unpresented checks. I'm putting the numbers, then I'm going to write. And because I'm covering the board, I'm going to move. Five reasons, right? What are the 5 reasons? Unpresented checks, unpresented checks, unrealized checks, tell me. Can you tell me the other reason? Third reason? Direct remittances, yeah. Direct remittances. I'm going to write that. No worries, huh? Direct remittances. In short, I will write direct remits. Okay, in short. Direct remits. You can even say direct deposits. Standing orders. Standing orders. Finally, bank charges. Now tell me why did I use 2 colors? Why did I use 2 colors? To show you the reasons why did I use 2 colors. Well, so you have used 2 colors and you took the colors that you wanted and you're asking us why you used 2 colors. If you said that, fair enough. No problem. I will tell you why I used 2 colors. Children, these 2 reasons, the blue reasons which are in blue color, these 2 reasons, unpresented and unrealized checks. These reasons are existing here in the bank statement. I mean, in the bank statement, they are missing. when we learned in the previous session, when we learned what these reasons are, what unpresented checks are, I told you, I explained to you. Okay, when I explained what unrealized checks are, I did it really in a really clear manner. So you should remember. Okay, I'll just do a very quick, not in detail, a very quick one. Unpresented checks are the checks that we have issued to our customers, to our creditors and all, and they have not taken the checks to the bank to encash the checks. So those checks that we issued are in the credit side of bank account, but since the checks are not yet being presented to the bank, in the bank statement they are missing. Now you remember. Just like that, unrealized checks are the checks that we have received, the checks that we have accepted, and checks that we have deposited in the bank. We have debited when we deposit, but the bank has not yet taken, not yet realized. The bank has not yet transferred obtained the money for those checks that we deposited in the bank. But when we deposited, because we debited the bank account, because we debited it in our bank account, these checks are, unrealized checks are already recorded, not recorded yet in the bank statement. That's why those two items are missing in the bank statement. Yeah, I hope you got it. But these other three, which are in the bottom, these three are, children, these three are direct remittances and standing orders and bank charges. These are actually recorded from the point of view, from the side of the bank. So they are in the bank statement, but they are not recorded in our bank account. That's why they are the items which are missing in the bank account. These are the items which are missing in the bank account, in this, our bank account. Okay. Right. Having that understanding, with that understanding, children, we can go and check. Go and check how to do this, how to do the cross-checking. The cross-checking, as I have shown here, the cross-checking, that means our debit side is compared with the credit side of the statement. Our credit side is compared with the debit side of the statement. All right, our debit with the credit, our credit with the debit. Cross check, it's a cross check, right? And you know the reason. What is the reason? All right, okay, fine, we'll do it, shall we? Children, don't forget that we are checking, we are doing this check or the cross checking to find these items, to find these items. Okay, all right, here it says everything that I explained just now. The debit column of the bank account should be compared with the credit column of the bank statement, and the credit column of the bank account should be compared with the debit column of the bank statement. This is what I explained just now. Yeah, okay. Each value in the bank account should be checked with should be checked to see whether those are included in the bank statement. Okay, item by item, that's what we are going to do. Item by item by item, we are going to check. Items which have been recorded in both should be marked. We can tick the items which are present, the items which are there, we can tick. Okay, and items remaining unmarked, unticked, are the missing items. Which have been recorded only in 1. Okay, right. Those unmarked items are the reasons for the difference between the final balances. All right, so this is where we are coming at. Those unmarked items are the reasons for the difference between the final balances. All right, let's check this example, shall we? Let's take this example. Bank account and the bank statement of Nadika's business. Nadika, her bank account and the bank statement she received from the bank, both are given. Children, it's for the month of July. There you go. Let's start checking. Bank account on top, bank statement on the bottom. I'm going to use blue color for debit. I'm going to use the usual color, red, for credit. How are we going to check these items one by one? Like this, right? I'm going to draw the arrows and show you how it's done, huh? Debit this side. Let's focus on the amount column, the value column. So the debit value column should be compared with the credit. Okay. Credit side value column, the amount column, should be compared with the debit. Got it? You know the reason, right? Yeah, of course. Children, I'm just curious. Do you want me to use one color for the debit column and the credit column, because we are going to compare this side with this side? I'll use one highlight color so it's clear to you. Okay, like this, maybe like this. Bank account. Bank account. Our bank account. Debit side. Debit side. And bank statement, credit side. We'll use a light color, all right, to fill. Let's use this color. All right, now it's clear to you, huh? And credit side, with the debit of statement. Fine, we are using yellow. So now it's clear. Now it's very clear. We'll start ticking. First item on the debit side of our bank account. First item on the debit side. Balance brought forward. That is the final balance of last month brought forward to this month, and the bank account had a 15,000 balance at the 1st of this month, 1st of July. Yeah, balance brought forward 15,000. Let's check that balance in the bank statement. It should be in the balance column. Yep, it's there, but we don't have to tick that because that is the opening balance. Opening balance is correct. Just remember that the opening balance is correct, no problem in the opening balance. Second item, cash deposit 8,000. Let's check 8,000 whether it's there in the credit side. 8,000 is there. Check the description of it. Cash. The date, children, the date is not always the same. Date is not always the same. So I'm going to red circle it. I'm going to red circle it. Circle it in red. Because I want you to remember that the date is not always the same. The date should not be the same, because sometimes the cash deposit is done on the 5th and it has gone to the statement on 5th, the same date. Most of the time, check deposits are not mentioned in the bank statement on the same date. Example, the second deposit, 12th. Check number 65, 12,000. That is actually here, but check number 65, see? 65, see? 12,000 is actually here. Yeah, you can see that. But the date is different, see? 15th. 15th. What I'm telling you is don't check the date. Don't worry about the date. Just check the amount, cross-check the amount with the description just to confirm. Okay. All right. So cash deposit 8,000. It's already there. It's already there. Check deposit 65. Check 65. Check number 65. 12,000. It's already there. Check number 65. 12,000. It's already there. It's already there. Next, check deposit 46. Check number 46. Is it there? 5,000? Yeah, it's there. 5,000 is there. All right. Check number 65. Check number 46. Both are there. 65, 46. No problem up to now. Next, check. No, it's a cash deposit 7,000. Cash deposit 7,000. Let's check whether we have that. Cash deposit 7,000. Cash deposit 7,000. Is it there? Oh, it's there. No problem. Cash deposit 7,000 is there. Okay, it's there. No problem up to now. No problem. We will tick it with red color. $7,000 is there. Finally, we have one more check here. Check number 58. 14,000. This is what I'm talking about. Check number 58, 14,000. Is it there in the credit column? Check number 58 in the credit column. No. Is it there? No, it's not there. What we have to do is we have to don't mark, don't tick, because it's not mentioned in the statement. We will underline it. Shall we? Yeah, better we underline it. This one. Okay, 14,000 check deposit. It's not there, so I squared it. Right. Our debit side is done, children. The debit side items all are ticked, and the item which is missing is boxed. Can't escape. Okay, we'll move on to the credit side, shall we? Credit side. We have on top 10,000. We have to compare the credit side with the debit of the statement. 10,000 is here. Creditor 112, that means the check number which is given, which is issued. Check number 112. It's here. Check number 112 is here. Yeah. Next we have 4,000. Check number 113. 4,000, it's here. Check number 113. Done. Next we have creditor 114. 16,000. Check number 114, 16,000. Is it there? Nope. It's missing. Check number 114 is missing here. 16,000 is not in this column. No 16,000 anywhere. No. So that is the item which is missing in the credit side. Let's use what color? Whatever the color, it doesn't matter. Let's underline it or box it so it cannot escape. Okay, 16,000 is missing in the statement. That's why we boxed it. Done. Children, so you compare the debit side of the bank account with the credit side of the statement. Compare the credit side of the bank account with the debit side of the statement. Is it done? Are there any other items missing? Well, we ticked all the items in the bank account, but there are items remaining in the statement. Can't you see? There are 2 items on the bottom. Yeah, do not miss out the checking of the statement items. We checked the bank account items, but we didn't check the statement items. There are more in the statement. Okay. These all are checked items. Balance brought forward, we checked. Yeah. Debit side, all the items are checked. Credit side, all the items are checked. This is balance carried down. That is what the problem is here. That is the difference. The balance carried down, the final balance is the balance that is, different. That is the different balance. The balance carried down of the bank account, final balance of the bank account, and the final balance of the bank statement. These two are the problem makers of this situation. This situation is caused to us because these 2 final balances are different. The troublemakers. Okay? Different. children. And we noticed some more items in the bank statement here underneath. Let's mark them too. Standing order 18,000. It's not in our bank account. Finally, bank charges 3,000. It's not in our bank account. Now, one more is there, isn't it? This one, the direct remittance of 11,000. It's not in our bank account on the debit side. Okay, we found the items, all the items which are causing this trouble, the difference. Okay, let's see what we can do now. According to the above example, a favorable balance of 31,000 exists in the bank account. A favorable balance of 31,000 in the bank account. Yeah, we saw that. It's here. 31,000. And next sentence says the balance based on the bank statement is 23,000. The balance of the bank statement is 23,000. That's what it says. Yeah, balance on the bank statement is 23,000. Yeah, we saw that too. Where is that? Statement balance, it's here. 23,000. Balance in the bank statement 23,000. That is the troublemaker, the trouble that we are having now. What is the trouble? Final balances do not tally. Yeah. And here you go, children. Something that we did just now, few seconds ago. This thing they have done in the textbook too. See, items which are ticked, and the items which are not ticked. Yeah. Yes, we marked these items. Didn't we? Of course, we marked. Same items we have marked here. As you can see, children. Yeah. Yeah. These are the reasons for the difference in the two balances. Voila. Okay. Children, with this information, we can prepare the bank reconciliation statement. Shall we? When the debit side of the bank account and the credit side of the bank statement is compared, these items were found. Yeah. This one and the direct remittance of 11,000. Debit side of the bank account and credit column of the bank statement. Debit side of the bank account. This item and this item. That is what they say here, 14,000 and 11,000. Okay. Again, they say where the credit side of the bank account and debit column of the statement, and they are compared, these items were found. Yep, we found them. Credit side of the bank account, 16,000 we found, and on the debit side of the debit column of the statement we found 18,000 and 3,000. 16,000, 18,000 and 3,000. Okay. To adjust and compare these reasons in the following manner. Which manner? Adjusting the bank account balance and preparing the bank reconciliation statement. Something that is immensely so very important when preparing or when doing a bank reconciliation question. Children, both sides have missings or omissions or mistakes. Both sides, which means from our side, our bank account too have missing items. In our bank account too, there are missing items. See, these items are missing in our bank account. Which items? 11,000 missing in our bank accounts. Yeah, should go to this side. And these items are missing in that side. There are items missing in our side, from our side. And there are items missing from the bank side too. See, these items are missing here. This 16,000 is missing here in the yellow side. Yellow side. And this item is missing in the blue side. In the bank statement, it's not there. It's 14,000. That's what I'm trying to tell you. Okay, this 14,000 is missing. This 16,000 is missing here. This 16,000. The items which we marked. So we have to first do this initial step. What is the step? Children, we have to correct our balance. We have to correct our side first. Our side. That means we have to enter those missing items into our bank account and correct our bank account. Okay, that is the first step. Then we will reconcile that balance with the statement balance. Right? Likewise, children, the doing or the completing of a bank reconciliation question is done in these two steps. Two steps. First step, you must adjust the bank account, that is our side of the issue. Well, if you are still wondering what is the issue, this is the issue. This is the issue. This is the problem. The final balance of our bank account and the final balance of, this is our bank account, and the final balance of bank statement, they do not tally. They are not the same. That is the issue. Before you go and you check and correct anything else, you first correct our thing or what we prepared our bank account. That's why these items which are missing in our bank account, these items should be entered into the bank account. Okay, that's why it says here, adjust and compare these reasons. To adjust these reasons, 2 steps should be followed. First step, adjusting the bank account balance. So here, to do this, we prepare something called the adjusted bank account. Adjusted bank account. Got it? To adjust the bank account, that is from our side, the omissions, missing items, to put them and to complete the bank account, we prepare a separate account, a bank account called adjusted bank account. Okay, some people call it adjusted bank account, some say updated bank account. Doesn't matter, because we are going to update it now. Yeah, all right. After you prepare the updated bank account, or adjusted bank account, you have to take that updated balance and reconcile with the statement balance. To do that, we prepare the bank reconciliation statement. That is the second part. Bank reconciliation statement. In short, we call it the bank recon. The reconciliation statement. Got it? So that's that, children. With this knowledge, we'll wrap it up. We'll wrap up the session today. And the next part is doing a question or preparing the bank reconciliation statement. Adjusted bank account and the bank reconciliation statement, both. I hope you would get together with me very soon. We'll be doing the next session and a bank reconciliation question. I hope you will get together with me. So until then, do your work, be good. Hope to see you soon. Thank you.